What if everything you know about Bitcoin is dead wrong? While Wall Street just had its worst week in 5 years with stocks entering bear market territory, Bitcoin stood nearly unmoved, finally breaking its correlation with traditional markets in the most dramatic way possible. Today I'm going to show you exactly what happened, what it means for your money, and why this historic decoupling might be the most significant crypto event of 2025. Let's dive right into what just happened, because this is historic stuff. The U.S. stock market just suffered its worst week in 5 years. The Nasdaq plummeted 5.82% in a single day, officially entering bear market territory. That's down 20% from its peak. The S&P 500 crashed nearly 6%, wiping out over $3 trillion in market value. But here's where it gets fascinating. Bitcoin barely flinched. While the financial world burned around it, Bitcoin held steady above $83,000, dropping less than 1%. This is the kind of decoupling that crypto investors have talked about for years, but never actually seen at this scale. So what actually triggered this market chaos? It all started with what Trump called Liberation Day, implementing a 10% universal tariff on all imports. But what sent markets into absolute panic was China's response, announcing 34% retaliatory tariffs on all U.S. imports effective April 10th. Plus export controls on rare earth elements that are critical for technology manufacturing. This is essentially a full-blown trade war, and it's sending shockwaves through global supply chains. Let me put this into perspective. These rare earth elements are essential components in everything from smartphones to electric vehicles to military equipment. China controls about 85% of global processing capacity. The markets immediately recognized this as a massive threat to corporate profits, especially in the tech sector, which is why the Nasdaq got absolutely hammered. But here's where the story gets really interesting for crypto investors. Bitcoin has shown remarkable resilience during this chaos. Arthur Hayes, the former BitMEX CEO, summed it up perfectly. Bitcoin may have finally broken its correlation with the Nasdaq, positioning it as the purest smoke alarm for fiat liquidity issues. This isn't just random market noise. The BTC/S&P 500 correlation has reached multi-year lows. Let me be clear about what we're witnessing. This could be the beginning of Bitcoin's transition to a legitimate safe haven asset during periods of economic uncertainty. For years, critics have dismissed Bitcoin as just another risk asset that would crash alongside stocks in any serious downturn. Well, they just got proven spectacularly wrong. But Bitcoin isn't the only fascinating story right now. Pi Network has emerged as today's standout performer, surging an astonishing 39.9% to 67 cents, reaching a market cap of $4.58 billion on massive volume of $1.52 billion. Meanwhile, the NFT sector has experienced a dramatic mindshare surge from 0.96% to 4.02% in just 24 hours, with trading volumes up 46% despite price declines. And we've seen major institutional moves with PayPal expanding crypto support to include Chainlink and Solana, while Coinbase prepares to launch 24/7 Bitcoin and Ethereum futures trading on May 9th. These developments show that despite the broader market chaos, the crypto ecosystem continues to advance with growing institutional confidence. So what does all this mean for your portfolio? The most important takeaway is that we're potentially witnessing a fundamental shift in Bitcoin's market positioning. If Bitcoin can maintain this decoupling from traditional markets during periods of extreme stress, it could attract substantial new capital from investors seeking alternatives during times of geopolitical and economic uncertainty. For your portfolio strategy, our analysis suggests consider increasing Bitcoin allocation to around 48% of your crypto portfolio. Maintain a defensive posture with about 20% in stablecoins for buying opportunities. Keep a close eye on April 10th when China's tariffs officially take effect. Watch for the Fear and Greed Index dropping below 30 as a potential bottoming signal. If you found this analysis valuable, smash that like button and share this video with anyone who needs to understand what's happening in the markets right now. And drop a comment below telling me where you think Bitcoin is headed next. Will this decoupling continue, or will we see a return to correlation with traditional markets? This is Alex from Moonward Capital's Crypto Pulse. Remember, in markets this volatile, staying ahead of the crowd isn't just an advantage, it's a necessity. I'll see you in our next update.